Good morning, traders, and welcome to BCR's morning market analysis. Let's take a look at today's markets, starting with the US dollar. The US dollar started this week on a softer note, hovering near a 10-week low around 97.5 as investors look ahead to the Federal Reserve's policy decision. Markets are heavily leaning towards a 25 basis point cut on Wednesday, with only a slim chance of a larger move. Recent US data has reinforced the case, showing a weaker labor market alongside inflation. Globally, other central banks are also in focus this week. Canada and China are expected to ease, while Japan and the UK are likely to hold steady. Technically, the dollar remains in a descending channel with resistance capped at 98.24 and 98.32, while support lies around the 97.25 and the psychological key level of 97. Next up, we've got WTI crude oil, which edged up to around $63 per barrel on Monday, supported by concerns over Russian supply after Ukraine targeted one of Russia's largest refineries and as peace talks stalled. US political pressure is also in play, with President Trump reiterating calls for Europe to halt Russian oil purchases. Demand concerns and the risk of oversupply from OPEC continue to weigh on the outlook. On the technical side, oil is facing resistance at the 20-day moving average around 63.22 and last week's high of 63.78, with momentum indicators suggesting consolidation after the recent rebound. Support remains at $62 and 60.78, with resistance layered at $64 and 65.61. Next up, we've got gold, which hit a fresh all-time high of $36.85 per ounce on Monday as a weaker dollar and falling treasury yields boosted demand. Investors are positioning ahead of the Fed's first expected rate cut since December, with updated projections likely to hint at further easing coming later this year. Global trade tensions remain another layer of support as US-China talks continue in Madrid. Technically, gold has now risen in 6 of the last 7 weeks, with momentum firmly bullish. Resistance is seen at $36.85 and $3,700, while support sits at $3,600 and $35.55. Lastly, let's have a look at the Australian dollar, which climbed to around 66.74, extending last week's gains as a weaker US dollar set the tone. With markets firmly pricing in a Fed cut this week, attention locally turns to Australia's upcoming jobs report and RBA commentary. Governor Bullock recently highlighted signs of a stronger private sector growth, reinforcing expectations that the RBA will hold steady at its next meeting. On the charts, the Australian dollar remains in an uptrend, holding above the 66 cent level and its 9-day moving average at 65.97. Resistance is seen near 66.87 and the psychological level of 67 cents, with support around 66 and 65.70. Well, that's all for today's morning market update. All eyes now turn to the Fed's decision midweek, which is likely to set the tone across currencies, commodities, and risk assets. As always, manage your risk and happy trading.